Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for Elliott Wave Trading. Our website is www.24elliottwaves.com. The title of this video is How to Trade Like a Pro in 1 Hour, Part 2. In the first part, we were talking about the flat correction, okay, the internal wave of the internal wave structure, price structure, all right, of the flat correction is 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. All right. So if you do not know anything about Elliott wave, I will simplify to you. So stay with us. You are a new trader, you are a beginner, or you are a experienced trader. Stay with us. I will share with you some of my tips, okay, that you can use in 1 hour. You'll be able to apply this for day trading, for swing trading, and also for investment, okay? I want to bring on now Apple stock, okay? And we're going to the daily chart of Apple stock. I want to refresh your memory about what we have said in the first part of this video, talking about the flat correction and trading like a pro in 1 hour. So recently on the daily chart, okay, I want to refresh your memory. I was showing traders, I want to put the volume indicator on this chart because I was posting some information to traders on Google Plus and also on Facebook about Apple stock. We know that Apple stock is a dynamic bullish financial instrument. What is a dynamic bullish financial instrument? Check our article that we call Trading Critical Price Level on Google, okay? A dynamic financial instrument will go out for a long time. They are very, very strong financial instrument. Apple is a dynamic bullish financial instrument. Johnson & Johnson is also a dynamic bullish financial instrument. The American market, okay, the American like to be bullish, okay. They are, okay, also dynamic financial instruments. Most of the stock are bullish in the United States. So, and these are stocks that you don't want to sell, all right? But if you are selling them, you need to be very, very careful, all right? Google stock also is a dynamic bullish financial instrument because the fundamentals are too strong. And if you want to sell them, you want to time them very carefully, okay? I want to refresh your memory before we step to the next step of this video, this series of video that we call How to Trade Like a Pro in 1 hour, okay? So I have my indicators already here, the volume indicator. So recently on the daily chart, I highlight the volume indicator for traders. So the next stage for traders, when you are learning to trade, I say to you, it's about learning to master Fibonacci, fractal pattern, and also the volume indicators. So this is about the Day Pro traders website, okay? Trading volume, volume stock trading, okay? So I highlighted this volume bar, which is a surge in trading volume, and also where are we? And also this one here. These two volume surge alerted smart traders that there are professionals that came out of this bullish trend. All right. So in the first part of the video, when I was simplifying the subject of flat correction, remember how I simplify it. I draw a line like this, if you remember, that the price goes up first, okay? Are you with me? And then come down into a 3 move down. It went down in 3 moves, 1, 2, 3. That's the first part of the flat correction. 1, 2, 3. And then it goes up again in 3 moves or in 3 waves. Now, if my drawing are not correct, okay, because I'm not professional, okay, artist, okay, and it goes up again, 1, 2, 3, and we hit the level of 138% Fibonacci extension zone. You remember? So goes up from A to B, come down 1, 2, 3, and then goes up again, 1, 2, 3, to display new high at 138% Fibonacci retracement level. As everybody was expecting the price to go up more, the price come down in 5 move. One, okay, I don't want to draw it now. 1, 2, 3, 4, 5. I don't want to draw it down. Okay, so and we will look for opportunity to sell here if we receive a sell signal and the fundamental are weak. All right, this is what we said. Okay, look at this Apple stock. Recently, we noticed that the smart money bought Apple stock here. The price gap up and ran away. Okay, and this volume bar here is telling us that those who bought it here took profit. Some of them came out here. All right. So if you don't understand the volume bar, go to dayprotrader.com to click on volume stock trading. Okay. We know. So it does not mean that the price cannot continue to go up. All right. You remember? It does not mean that. But he alerting now, this is alerting now to be careful if you are bullish. If you are buying, we need to be careful. That's all. All right? We need to be careful. We can't ignore this information. All right? This volume bar. Okay? The fundamental may change. The market sentiment can change anytime. All right? But when we receive a warning, we cannot disregard the warning. All right? Okay. So price went up. So if we go like this, the question I want to ask you, will the Apple stock display, okay, on this daily chart, a flat correction after this move from A to B? Now, some trader will say, definitely. There's nothing like definitely in the market. That's being too arrogant, all right? We see all the time, traders are very intelligent, especially traders that are using the Elliott wave. They are very smart. These are kind of mathematicians. These are traders that want the market to be already all the time in an orderly manner. Okay, the market is not always in an orderly manner. Okay, and you may see sometimes some crazy things happening in the market for different reasons. Okay, so price went up from here to here. This is to refresh your memory about what we have said in the first part of this video. Look carefully what has happened. Price went up from A to B. How it went down? 1. It went down. 1. Even if my son is here, I ask him to draw a line here, he will do exactly that. And it goes down again. It came down in 3 more. Now, no one can deny that. Okay, let's zoom into it so you can see what I'm talking about. 1, it went down. 3 days, up a bit, and down. Now it's going up. Okay, so at this point in time, traders who understand the flat correction will be thinking in their mind, they will quickly use their Fibonacci drawing tools, all right? And they will highlight the Fibonacci extension level of this move from here to here, which is bringing us, in fact, I drew it last time, is in a zone of 103. hold on please, 10308. That's the level I told today last time, somewhere here. I want to adjust my line. Okay, I'll leave it as it is. So we will draw the Fibonacci extension from the beginning of this move, A to B, and we will highlight the 138% Fibonacci extension zone. Now, I want traders to remember that it's a zone, it's not a price level. So we will draw it, 138%, okay? In fact, I'll put it at 13808. That's the level I want traders to pay attention to. Okay, let's leave it as it is. Though you can see that it's not 10308, but I remember that level, 10308, all right? So we will draw the 138% Fibonacci extension level. So it came down 1, 2, 3. Now it's going up like this. It doesn't mean that the price will definitely, okay, repeat the pattern. Sometimes it may go in straight line, boom, 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 to 138% Fibonacci extension zone. Remember, if the price is going up, the price is looking for a better resistance level. Do not ignore it. This is what is creating problem in this messy market, and some traders get into trouble. There is a resistance here, which is the high of the move here from here to here. There's a resistance here. So the price pull back to the resistance zone. Trader can sell it right here. So you'll be wondering, George, what's happened to 138? Well, the market principle, the market stable data, the price always looking for a better resistance level if it's going up, looking for a better support level if it's going down. So there is a resistance here, which is this high here. So you need to be aware of it. People can sell it here, and the price will just go down completely here. But sometimes the price will do exactly what we are expecting, which is great. It may do something like this. 1, 2, 3, 1, 2, 3, and then push it up here. If it hits the 138% Fibonacci extension zone, this is a setup. Does not mean that the price will definitely go down, all right? But if we receive a sharp signal here, we will take it. But right now, we can just keep eyes on this upper stock. So at this stage here, if next week we receive a sharp signal here, we will take it. We will take it. Roll it down a little bit. Careful, careful. If it's going up, okay, we can buy again here. Will he do that? Until he's doing it, we cannot assume that he will definitely do it. This is the best approach. It's what I say to traders. It's not a magic one. It's a guideline. It's a theory. So the price may go, you may see sometimes the price will do exactly that, 1, 2, 3. So you go up from A to B, then go down 1, 2, 3, and then 1, 2, 3, boom to the 138%. It may not hit the 138. It may stop 100, depending on the market sentiment and the fundamental and what is going on. This is the summertime. We have the World Cup. During the summer, the market is very low. You have low volume. But sometimes you may drag it, play around, blah, blah, blah. The market, the pattern may be distorted sometimes. You may get confused, all right? But keep eyes on it, and it may go to hit the 138. It may not. The most important thing to remember, do not force, okay, this strategy on the market. Trade like a pro. So price goes up from A to B, 1, 2, 3, 1, 2, 3, hit the 138% level. So for instance, if upper stock follow the pattern, 1, 2, 3, 1, 2, 3, and hit the 138% level, at this point in time, we will give priority to short signal. If you want to buy upper stock at that point in time, if you reach the 138% at the level of $103.08, if we want to buy, we will prefer the price to break above the 138% to validate the 138% as a support level before we may decide to give it a chance with extreme caution. All right, you understand? Going step by step. Step by step. But sometimes you will see the price will do exactly that. So we may roll it down a little bit for 3 days and then continue to go up, or it may just roll it down straight away. It makes sense? It's also powerful. Let's go back now to the core of this video, how to day trade like a pro, part 2. In this video, we're going to talk about a downtrend. In the first part, we were talking about the move from A to B in an uptrend. Now we're going to concentrate on a flat correction after a downtrend. You need to remember that the flat correction will take place after a strong bullish move and after a strong bearish move. This was a strong bullish move. You see, it gap up big time. The strong went out from $76, boom, to the level of $80. Very big gap, all right? And then from there, it just ran away to this point. Come down, 1, 2, 3. So when we see a strong bullish move and the price pulling back like this, we are thinking of what? The Elliott wave, a flat correction. All right? Because you are my friend, I want you to understand this and to use it like a professional trader so that you may understand that the market can be distorted And if it's distorted, you don't rush into it. The bottom line is that you do not violate, okay, the market patterns. You can see also on this chart that the first move, which is from here to here, the trend line is broken. Yes or no? Trend line is broken. 1, 2, 3. Bringing the price below the common sense trend line. 1, 2, 3. So we are not violating the market pattern. And it's clear. 1, 2, 3. Will it now display another 1, 2, 3? So we must pay attention to this trend line also, all right, before hitting this level. Or will it come down here? All right. So in this second part, let's start now. So price going down. So following our guidelines, the first Elliott wave is the wave that will break out of the consolidation zone because the smart money make their decision during a low volatility period. They'll be buying like a mad dogs, so to speak, all right, quietly, telling their brokers, buy Apple for me at this level, specific price. So price goes down, 1, 2, 3, 4, 5. Okay. And these waves are not overlapping because these are normal, okay, internal wave of an impulsive wave. 1, 2, 3, 4, 5. I will simplify it. That's why I said you stay with us. At the end of the video, I'll simplify what I'm saying to you now. Then the price start going up. Okay. If my drawing is wrong, okay, I'm not a professional artist. Okay. Okay. It makes sense? You want to understand your wave, the flat correction? Okay. And then went up again, 1, 2, 3. Okay, so one. And this time again, 1, 2, 3. Don't worry about it. Okay, I'm learning to draw. And price display a new lower low. A bit of exaggeration from my side. But the most important thing to understand what we are talking about here. So price went down, 1, 2, 3, 4, 5. Impulsive move. The trend line is broken. Price went rally up a bit, 1, 2, 3. And then come back down, 1, 2, 3. This time, violating the previous low. Displaying a new lower low right here. So color the new lower low in orange. At this point in time, ladies and gentlemen, the slow stochastic will be oversold. Traders that are using the stochastic pattern, the 24SP trading material, which I recommend to traders to buy, go to www.stochasticbuddy.com. If you are not TST trader, TST WSYS usual trader, get the 24SP trading material. All right? If you understand Elliott wave, there is one stochastic pattern that we talk about. The stochastic is overbought, okay, and then display a low that did not reach the oversold zone, followed by another lower low that reaches the oversold zone. This is a stochastic pattern. Now, we share this on YouTube already. That's what I'm talking about. There are 13 specific stochastic patterns. Stochastic will display a low, followed by a lower low. All right? Traders who understand Elliott wave and the internal wave will make better decisions with these stochastic patterns. Stochastic display low, followed by lower low. And at this point, the stochastic is oversold. Yes or no? It's oversold. The RSI will be oversold. The CCI will be oversold. But because you want to trade like a pro, and you understand the Elliott wave flat correction, the price went down in 5 waves, and then there was a correction, 1, 2, 3. And then the price display a new lower low, but only after 3 moves down, which is telling us that this new lower low is a correction that is not completed. This is uncompleted correction. But if you are ordinary trader, you will think that the price has displayed a new lower low. It's still bearish, but it is not bearish. Looking at the internal waves, keeping your eagle eyes wide open, this make you smile a little bit. You understand that you went on in 3 moves. Okay, you want to be patient. Now you roll it up a bit. And, okay. All right. Couldn't go below it. It's oversold here. The stochastic oversold, as I said, momentum oscillator oversold. All right. You understand the flat correction. 1, 2, 3, it went down in 5 moves. 1, 2, 3, 1, 2, 3. Your RSI is oversold, your momentum oscillator oversold. You understand the flat correction. You will look for opportunity to buy right here. Again, for traders that understand French, we will call this place what? Le lieu de rendezvous. Be there on time. All right? If you give me an appointment, be there on time, okay? Right here, the meeting point. Because the previous trend was bullish, the market is saturated by the bear, they think that the market will go down more. As the price rally 1, 2, 3, there are more sellers in the market than buyers. The late come in, and they will sell here. You can sell if you want to. Experienced traders will sell here. So they watch it 1, 2, 3, 1, 2, 3. They sold it here, they will expect it to display again 1, 2, 3 in normal condition. Remember what we said, do not force it. 1, 2, 3. You will take your profit here, very often near the zone of 138% Fibonacci extension zone. Conservative trader may take profit at, 1 to 3% Fibonacci extension zone. You want to secure your gain, control it. Whether you are day trading, swing trading, position trading, or investing. You come out here. If you are a hedge fund trader and you think that the sector is bearish, it's not going anywhere, I told all my clients to sell, and we continue to sell. You see people on YouTube or on television saying that the market is bearish, we will continue to sell. But you don't want to sell it here. If you want to sell, use a pension fund, hedge funds, clients' money. Wait until it goes below this low and retest it and validate that low as a resistance before you continue to sell. Do not sell and forget when you reach this point. But earlier wave traders that understand the flat correction will secure their gain and will be very careful. And very often, the market will be oversold at this point and will go up again in 5 moves. 1, 2, 3, 4, 5. I don't want to draw it on my chart. Okay, this is the inverse of what we have discussed in the previous video. This is not a normal impulsive wave, so the wave can overlap. So you see some dodgy move down, wave overlapping, but in 5 moves to the upside. I don't have enough room to draw. I will remove, okay. All right. Okay, you see now? All right. So price goes down fast. If you want to simplify it now, price goes down. So you don't understand earlier wave, or you don't know anything about internal wave, or you do not want to know. Price goes down from A to B. Okay. It went down from A to B. Now it rallied a little bit on low volume. 1, 2, 3. In 3 moves, very important, in 3 moves. And then come back down again. 1, 2, 3. Displaying a new lower low. At this point in time, if you were selling all this time, you want to bank your profits, secure your gain. In fact, you will look for opportunity to buy here. This is a setup. You will use the trading dream, the setup, the signal, and the low risk entry point. You want to buy a value support level. Sometimes the primary hit the 138% level, but if there is a better support level below, the smart money will say, bring it to the best support level. So the primary continue to go up, go down more, even beyond, we go to 150 instead of 138. This is what I'm saying to you. It's not a science. human beings and make decisions. The most sophisticated market participants are very serious. They will not buy if the price is not at the best place where there is a value. So do not stop on the 138. Be very patient. The setup, the signal, and the low risk entry point. You are TSTWSY use your trader. Go to the signal time frame and then use the TSTW key 02 to enter the trade, manage the trade. Go to Google Finance, check the fundamental. Tap in the EPIC at Google Finance, check the fundamentals, the news regarding the financial instrument that you are trading. This is valid for forex, for stock, for commodity, for futures, for option. You are trading option. You want to understand the area wave patterns. All right, very, very important. You are using binary trading. You want to understand the flat correction, to time your entry carefully, to take the best signal, to concentrate on a high probability trade setup. This is a beautiful high probability trade setup. And at this point in time, the price fundamental good, market environment bullish. Okay, excellent news start coming out regarding the financial instrument that you are trading that was bearish for some time. Now the correction is still underway. The correction is not finished. The correction will finish here. You want to take advantage of the last part of the flat correction, because the flat correction is formed of three parts. From here to here, that's the first part, 1, 2, 3. The second part is from here down to this level, another 1, 2, 3. And the third part is from here to here, 1, 2, 3, 4, 5. 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Minimum price move is free. Remember, this move 1, 2, 3, 4, 5 is not an impulsive move. It's part of the correction that is taking place. Though the price has displayed a new lower low, the market is not, okay, bearish at this point. You see here, it displayed a new lower low. Okay, so now it went to display a new lower low. So price went out from A to B, 1, 2, 3, 1, 2, 3, display a new lower low compared to this low. Went down from here to here. Now you have a new lower low. Though a lot of late comers want to sell more, to the surprise, because what has happened, there are orders here to sell. So went down from A to B, people, aggressive breakout traders. So break down, all right? So draw a line here. So I want to highlight my drawing for traders so you don't get confused, okay? Orange line. Went down from A to B, the orange line. And now, right here, after going 1, 2, 3 up, it comes down 1, 2, 3, go breaking below the previous low. Because aggressive breakdown traders will place order here to sell. Where there are orders, the market will fill these orders. 80% of the time, they will bring it there. The market makers need to get paid. All right? And they get paid when orders are filled. These are market participants also. So, especially if you are trading stock, you want to understand this. Trading commodity, forex, you want to understand this. All right? It's valid for day trading. You see this pattern on a 50-minute chart, 5-minute chart, 1-minute chart, every time frame, daily chart, okay, hourly chart, weekly chart. Very often, hourly chart, 50-minute chart, daily chart, you'll see it. If you see on a weekly chart, be ready for it. Monthly chart, don't force it, all right? Price display new low low. People think this is, okay, a bearish trap. For the bear that place order here, this is a bearish trap because they place order to sell. If they don't close their trade before the price hit the level of 138%, remember the price can go down more if the fundamentals are weak. All right, if it's weak, don't just buy it, or because it reached 138%. If it's weak, and they come out with some crazy economy news, they are losing more market share. Well, the small man is not going to buy yet. Continue to go down. George, you will say to me, George, you say 138. Why are you going to 150? Why you went to 168% Fibonacci extension zone? Why you went to 200%, George? This is not a science, okay? Now, I'm talking like this to get your attention, okay? All right? So, here, this is a beautiful oversold. Remember the stochastic pattern? Stochastic oversold, displaying low, followed by lower low. All right. I say to trader that got 24SP, you use it, you see something you don't understand, get back to me, okay? Get back to me, please. All right. We are here to answer your question if you are using our tools, okay? All right. So here we are. So for a downtrend, price was in a down move and then went up 1, 2, 3, 1, 2, 3, and then come back down. Okay, 1, 2, 3. At this point, it's oversold zone. RSI oversold, CC oversold, momentum oscillator oversold. We check the fundamental. We use the trading drill. We can swing trade at this point in time. We can position trade. We can invest. We can use this flat correction to manage our portfolio if you are a hedge fund manager or a big institution like the bank. So you are selling, you have your client money, price hit that level, you will be very, very cautious, and you will be wondering whether this downtrend will continue or not. And also you want to be ready, okay, to see the bounce up. Because why the price rally up in 5 move? Because a lot of orders were placed here to sell. These orders are filled, suddenly price, to the surprise of the bear, boom, it come back up. They are wondering what's going on. So they sell again here. This time as the price coming down, couldn't go and display a new lower low compared to this one. And continue to go up. They all capitulating. They all coming out of their bearish trade very fast. They don't want to stay around. Boom, 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 around. And the gorgeousness of this part of the flat correction, the C part of the flat correction, is because very often it's very fast. You get paid quickly, especially if you're a day trader. You want to get paid. You want to get paid quickly. All right? And you will see, boom, 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 they all coming out. And because there are software, talking about high-frequency traders, and pattern recognition software, okay, these software dictate the pattern, and they will buy. They will buy at this point in time. The pattern recognition software, okay, the best pattern recognition software use the Elliott wave patterns and the stochastic patterns. All right? It makes sense? It is also powerful. If you want to know more about the flat correction, you need to go to www.24elliottwave.com, learn everything about Elliott wave. You want to understand more, go to our YouTube channel, 24elliottwave channel. Ladies and gentlemen, this is a trading strategy. It's not a magic one based on the Elliott wave pattern. There are 13 specific Elliott wave patterns. There are also 13 specific stochastic patterns. The market patterns commands any other pattern, including the Elliott wave pattern. The Elliott wave pattern is about the price structure, but we must use the price structures with, okay, the market patterns. Whenever you are trading, you want to align any strategy that you are using with the 3 market pattern, the rising channel, the declining channel, and the horizontal channel. Of course, at this point in time, the trend line here will be broken, and you will see beautifully, okay, that, okay, this move to the downside, okay, is stalling, and you will take it up. Always the market pattern first before, okay, the price pattern. So summarize this video, okay, we were talking about how to trade like a pro in 1 hour, part 2. In this video, we were talking about a downtrend, a financial instrument that was in a down mode. For a flat correction to take place, the down mode must be very, very strong. The bearish momentum must be very, very strong. Very often, you see that even either during the first wave or the third wave, we may see a kind of gap. All right? Price very, very bearish going down, okay? Because the market is saturated by the bear, once the price starts going up, people want to sell it more. So you went 1, 2, 3. The bears say you are not going anywhere. Fundamentals are still bearish because the fundamentals are lagging. The company is improving, but the market is not responding yet. They are careful. They are skeptic, okay? So they are waiting, all right? So the bears sell it again. That's the second part of the flat correction. 1, 2, 3. This time, the bear manages to display a new lower low. All right. At this point in time, a lot of new latecomers thought that the market will go down more. But for one reason or another, because the fundamentals are improving gradually, or the sector, in fact, is improving gradually, or the market also is improving gradually, talking about the trading triangle, the market first, the sector, before the financial instrument that we are trading, or the market leaders of that sector are improving, talking about the internal of okay, the heart of the trading triangle, the market leaders, the fundamental and economy news, all right? The fundamental has changed, all right? Maybe a new management is in place, okay? The sector is improving, the price starts going up. But also, the correction that has started here is a kind of a complex correction. 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. The correction will finish here. People thought that, okay, all right, it's going up. But then they sold it down. And now, as it's going up here, the breakout traders that place orders here to sell were forced to close the trade, okay, creating, okay, a beautiful bullish momentum during the last part of the flat correction. This strategy is valid for day trading, especially on the 5 minutes, 50 minutes, hourly charts, okay, and also for swing trading on the daily chart, weekly chart, for position trading, even on a quarterly chart, yearly chart. If you see this on a yearly chart, okay, the flat correction is an excellent tool to forecast the market and also to time the market. I hope you have learned something from this video and we put into use, okay, to make excellent trading and investment decision. If you like this video, okay, please give us the thumbs up. If you dislike it, okay, we want to know. Give us the thumbs down so we know how many people dislike it. Maybe this will allow us to improve, okay, our videos, okay. Or if you have any question, put it below. Any comment, put it below. If you truly like it, okay, please share it on Google Plus, all right, on Facebook, and also on Twitter. I hope you have learned something from this video and we put it to use, okay, to make excellent decisions. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.